What I see happening, there really isn't a real top for assets like gold in dollar terms, because who wants to be the last one holding worthless paper, I think, is the way that the central banks are looking at it. Of course, Voltaire's statement, all currencies revert to their true value of zero, I think in this case is very true. And the bottom line is that the central banks, they don't care about any of these correlations. They're just trying to, I think, de-dollarize and accumulate metals. And they're the ones, in my opinion, that are pushing this up. And I don't think you've really begun to see anything yet, because there's an old statement that says there's no a gold bull market because it speaks to a different mentality.
Spot gold prices have surged this week as investors anticipate potential U.S. interest rate cuts. However, central bank buying, particularly by China, is a significant factor driving gold's strength since 2022. Central banks worldwide have increased their gold reserves, with China leading the way. According to Thompson, central banks bought 50 to 60% more gold in 2022 and 2023 compared to the previous decade. China's central bank has consistently added gold to its reserves, marking a 16-month streak as of February. This continuous buying spree has contributed to gold's rise to record highs. Official data released on Thursday revealed that the People's Bank of China increased its bullion holdings by about 390,000 troy ounces last month, bringing the total to 72.58 million troy ounces, equivalent to around 2,257 tons. Andy Schectman highlights China's significant gold acquisitions, suggesting that their actual holdings might exceed official reports. Alasdair Macleod estimates that China possesses 38,000 metric tons of gold, with a substantial portion owned by the state. Andy argues there may be no ceiling for assets like gold in dollar terms because central banks are accumulating metals as a hedge against currency devaluation. Quoting Voltaire's famous remark that fiat currency always eventually returns to its intrinsic value, zero, Andy suggests that central banks intentionally drive up the price of gold. He dismisses the notion that central banks are concerned about market correlations, emphasizing their focus on hedging against currency devaluation. Amid mounting concerns about default and political risk, central banks increasingly favor gold over treasuries. The U.S. Treasury Secretary's threats to sanction Chinese entities for aiding Russia further incentivize countries to seek alternatives to the dollar. Andy predicts that gold prices will continue to climb due to its historical performance and the absence of counterparty risk. We will present clips from Andy Schectman's interview with Stacing Surfer. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
But the point of the matter is that in my mind, the central banks that are accumulating it, they don't care about these signals or about these correlations between rates or a strong dollar or the divergence between gold and rates. I think if you look at a comment that was made by the chairman of the Shanghai Gold Reserve in 2014. Now, again, you always hear they think in terms of years or decades. We think in terms of minutes. The guy says that the Shanghai Gold Exchange will change the current gold market with its consumed in the East but priced in the West arrangement. When China has the right to speak in the international gold market, the true price of gold will be revealed. And this was in 2014. And when you see the amount of gold, 17 straight months that the Chinese have bought, according to the Bank of Montreal analysts, understating how much they really own. Alasdair Macleod would tell you they own 38,000 metric tons, 20 by the state, 18 by the people. But really what I see happening, and I would say, look, there really isn't a real top for assets like gold in dollar terms, because just like who wants to be the last one holding worthless paper, I think is the way that the central banks are looking at it. Of course, Voltaire's statement, all currencies revert to their true value of zero, I think in this case is very true. And look, the bottom line is that, the central banks, they don't care about any of these correlations. They're just trying to, I think, de-dollarize and accumulate metals. And they're the ones, in my opinion, that are pushing this up. And I don't think you've really begun to see anything yet, because there's an old statement that says there's no bull market like a gold bull market, because it speaks to a different mentality. It doesn't speak to wanting to make profit. It speaks to protecting your ass. And this is why you see at 3 p.m. last Thursday a $1.6 billion sale of gold futures in about 3 minutes, which temporarily knocked down the price. But you do something like that, you're either a complete and total moron or you're doing a drive-by shooting. Because when you sell that large of a position, the idea is to bleed it out over time, not dump it onto a very thinly traded market at the end of the day, when really it's in a transition between New York and Asia, and it's just complete stupidity. But anyways, bottom line is, yeah, it does seem like this is different. It seems like the central banks, in my mind, are choosing gold over treasuries, which have the risk of not only default, but in the case of our brain dead Treasury Secretary, who in Brazil said, a member of BRICS, we need to confiscate, not just sanction, the Russian forex reserves. And now she's at it again. And in an interview with CNBC from the, it's too stupid to be stupid category, she says the United States is prepared to sanction Chinese banks and companies, as well as Beijing's leadership, if they aid Russian military in its invasion of Ukraine. Well, it's okay for us to aid the Ukraine, but it's not okay for China, their ally, to aid. So now we're making demands. And, she goes as far as to say, that we stand ready to act if we see significant violations, and it's anything that involves Russia's military aid is unacceptable. And the whole thing is nuts. She says China is entitled to have a relationship with Russia, but anything of military aid, well, we're going to sanction you. Now, this is the whole driving force behind, I think, the strength in commodities, strength in gold, is that these countries look at gold, which has outperformed for 25 years a treasury bond by a huge margin. It's outperformed the S&P, and it's done so without counterparty risk, without sanction risk, without default risk. And I think this is what is putting a floor under the price of gold, which I expect to continue to rise.
In light of recent warnings from the International Monetary Fund, IMF, regarding America's unsustainable fiscal practices, Andy addresses their concerns about the potential repercussions if the current administration remains in power. According to the Treasury Department, the IMF's cautionary note underscores the gravity of the situation, particularly regarding the nation's staggering national debt, which currently stands at approximately $31.4 trillion. This figure has only climbed, reaching even higher levels in the past year. Andy highlights the pressing issues at hand, including the alarming increase in national debt and what he perceives as reckless spending habits. He stresses the urgent need for responsible fiscal management to mitigate risks to the domestic economy and the global economic landscape. Moreover, Andy criticizes the administration's handling of foreign relations, particularly concerning China and Russia. Actions such as sanctions and asset confiscations could have detrimental effects, potentially exacerbating tensions and leading to further destabilization on the global stage. Andy suggests a more diplomatic and strategic approach is essential to safeguarding national interests while promoting stability and cooperation in international affairs. Let's get back to the interview.
When you speak in terms of could or would or should, yeah, it should, it could, and it probably will. And I say that to you not out of hope. Right. So right now we have gold at, let's just call it 2350. If we divide by 42, the average price of the last 200 years between gold, or the relationship between gold and silver, has been roughly 42 to 1. It's at roughly 85 to 1, way out of whack. At 42 to 1, that puts it at $56. But if you take the real current mining ratio of 7 to 1, what it's truly coming out of the ground at, and take 2350 divide by 7, well, you're at $335.70. So when you talk about logic,
and Andy, that's all without inflation happening.
Right. And the inflation adjusted numbers, if you take it and go way back, you're talking silver that could actually go into the multiples of that. Now, I don't want to say that's going to happen, but Look, the one thing I have learned in 34 years in finance is that bull markets will go higher than anyone ever thinks possible. Honestly, I believe, and I know this isn't a political channel, but God help us if the current administration stays in here. And at that point, there's nothing stopping it, because with all of these new people who they're trying to give voting rights to get into the country, look, either way, you're going to have half the country pissed off. But when you look at what's happening to this country right now, where you're getting $1 trillion every quarter in debt accumulation, and a country that's addicted to spending. I mean, we're borrowing money, we're insolvent, and we're broke, and we're giving more and more money to Ukraine. And now we are actually talking about confiscating the Russian forex reserves and using it to give to the Ukraine. I mean, it's like people saying, can we borrow money from you? Even though you're broke and insolvent, can you borrow it from someone else and then borrow it to us? It just makes no sense. And I mean, this country needs a change. And I know a lot of people are polarized around Trump, but I think he has a far greater chance of slowing down this controlled demolition and maybe even reversing it than this current administration, who is hell-bent on doing everything possible to lose the world reserve status, not only weaponizing the dollar, signing executive orders to go green, destroying our natural, our own gas production, and not only that, the strategic petroleum reserve, and going more and more and more into debt, while this country is getting more and more sideways in every single way. So, yeah, I do think that if this current administration stays in, it's going to be awful, personally, for the economy. And who knows how high gold and silver goes. That doesn't mean that Trump will come in and fix everything. You can argue mathematically we're so far down the rabbit hole, it will be very difficult to stop. And that's why a lot of what I think the stupidity that we see is intended. You know, I mean, if you realize what makes the dollar is the protection of the Saudi kingdom, that's the petrodollar, signing an executive order to go green, and then sanctioning and confiscating assets of Russia, sanctioning Iran, sanctioning all of these countries, saying you can do this, but if you can't do that, even though we can fund the Ukraine. If you, China, give money to Russia, well, then we're going to sanction you too. We go around in that manner. We are incentivizing this all to happen. And if this country still had the morals that it always did when we were young, and you respected authority, you can still question it, but you respect authority. We know that the elections are real. There's a process to getting into the country. You know, there is no lawlessness in the big cities where you feel scared to walk from your hotel to a restaurant in San Francisco at 10 o'clock at night. All of this stuff that continues to happen, it's too stupid to be stupid. And so, yeah, if we have a leadership that doesn't fix this stuff now, we're gonna go down the toilet bowl. As far as I'm concerned, gold and silver go to the moon, but who cares at that point?
As central banks continue to buy gold due to its price inelastic demand, and with the escalation of conflict in the Middle East, Goldman Sachs's forecast of $2,700 an ounce by the end of 2024, and Citigroup's forecast of $2,875 by the end of 2025 seem increasingly plausible. If neither U.S. inflation nor the Federal Reserve can halt the bullish momentum for gold, the only trajectory left for futures prices is to launch to the moon. Can gold prices soar as central banks accumulate more, defying market norms and reaching new peaks? Share your thoughts in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.